Good morning and welcome to the VSA Capital Tech and Transitional Energy podcast on Thursday, the 14th of July, as we approach a heat wave. I don't know how the heat wave affects technology and transitional energy stocks, but probably doesn't. Anyway, morning, Phil. How are you?
I'm very well, thank you very much, Andrew. And it is getting warmer, and it's certainly hot in London today. But I'm looking forward. I am a golfer, looking forward to the British Open golf over the weekend. So it'll be a nice relief.
Well, we're recording this slightly early because I've got a tee time at 10:30, teeing off at Trevose. I'll be playing today. Just as good to watch, honest. Probably funnier to watch because my balls go everywhere. Anyway, look, I'm obviously down in Cornwall recording this down here, so you're going to have to do most of the talking. So I'm just going to start on something which is relevant, but is also interesting. And that is something you sent to me, which was you pointed out that in 2008, oil price was $147. The price at the pump was £1.20. Today, in 14 years later, the oil price is $100. Yet the price at the pump is £2. Now, obviously, a lot of that is to do with the exchange rate. In 2008, there were $2 to the pound. There's only $1.20 to the pound. But even so, that equates to £73.50 for a barrel of oil, going to £1.20 at the pumps, or £83.33 a barrel of oil, going to £2 at the pump, which actually tells you the government is taking rather a lot of tax out of fuel. And actually, a lot of the inflationary price in fuel is government tax in this country. Now, actually, I think that's not a bad thing. We've got to get tax in somehow. So why not do it, per use as you use your fuel? Slightly controversial because, of course, some people have to buy fuel and some don't. But it's an interesting situation. Of course, it also brings us on to the dollar movement, because everyone talks about sterling being weak. Actually, they're talking now about the euro being weak because it's gone to parity with the dollar. The reality is that neither are that weak. It's that the dollar is very strong. And that brings in actually technology as a sector, certainly from a UK investor point. A strong dollar is good because so many of the stocks are actually, one, getting revenue in dollars because technology tends to sell in dollars. And of course, a lot of technology exposure in funds is to US stocks, so they've won on the currency as well. I think that'd be fair to say, wouldn't it, Phil?
Yeah, yes, I do. That is a very fair conclusion. There is also the fact that it does make UK companies rather potentially cheap for US acquirers as well.
It makes it look very cheap for US acquirers. Now, the market at the moment is pretty horrible. I know a few listeners are hiding behind the sofa. And have been hiding behind the sofa, frankly, all year. My advice is get out and go for a walk on the beach or play a round of golf. But if you are hiding behind the sofa, there's some good news. You might get an acquisition. It's interesting because actually, even the markets are tough. We saw an announcement from FinCap today that their outlook was substantially lower. That's how bad it is in terms of doing deals in this market. So we could do with a good bit of M&A. Actually, at VSA, we earn quite a lot of dollars. So that's actually quite a bit of good news. But finding stocks which have dollar earnings but sterling cost base, good place to look at the moment.
Yeah, it is. And the news, I don't know if we've been watching some of the news on inflation that's coming through. Obviously, the US inflation figures for June came through this week, and they were saying there was a jump of about 9%. Overall, and they said the reason for this is interesting. They said the reason for this is a very tight labour market is boosting wages, contributing to higher prices and services. And in the very same week, Google, parent of Alphabet, have said, and bearing in mind that Google has a lot of revenue coming from advertising, that it is freezing. It's not entirely. It isn't freezing hiring entirely, but will still hire for engineering, technical, and other essential skills. So it is looking at the rate of hiring, and we're starting to see this across tech. And Microsoft apparently earlier announced that it was eliminating a few positions, which Is not dramatic, and that Facebook has warned its workers to prepare for a deep economic downturn. But I think this is quite interesting now, Andrew, that we're starting to see, potentially there we are, US inflation figures coming out saying that it's down to a tight labour market, and actually look at what some of the bigger companies are now saying is we're looking carefully at hiring.
Well, that's what you'd actually expect, and that, of course, is what dampens it down, and demand gets squeezed and dampens down. We're seeing airports having to limit the number of people that can go through them, dampens everything down. So that should actually make inflation transitory. But the problem is, of course, we just don't know yet. We still have these three big uncertainties in the market. The war in Ukraine, how long will it go on for? No one has a clue. Inflation, is it transitory or is it here to stay? No one has a clue. And of course, we still have China and the zero COVID and supply chain problems. How long will that last? And are we in Cold War II? Talking of Cold War II, Phil, I've been reading a book down here called The Digital Silk Road, China's Quest to Wire the World and Win the Future. Now, if you're worried about China buying all the technology in the West or getting its own technology into the West so that it can see everything that's going on through its AI, through its cameras, through controlling everything, if you're worried about that, probably don't read this book because it's quite scary. And it reminds you how companies like Nortel got completely caught out by the Chinese. It's quite an interesting read, though. And as a technology company, you have to think twice, I suppose, sometimes. Anyway, that's a bit of a divergence, but quite an interesting book.
Set right. I'm going to make a purchase.
No, I'll tell you what, let me read mine and you can buy it off me secondhand. I love a trade. Hang on, it cost 20 quid. They're quite valuable. I'll sell it to you for 30. No, I'm joking. Right, let's, as I say, it is a pretty horrible market out there. There is a little bit of news out there, I think, but you've been following the news more than me, Phil. So yeah, I'll let you kick off on the news and talk about what you've been seeing.
Right. Okay. Yeah. Let's just quickly on to renewables, transitional energy. And business, of course, is still going on, very much so. And there was an announcement from Equinor, and it's looking to buy 100% stake in a company called East Point Energy, a US-based battery storage developer. And East Point Energy has got a 4.1 gigawatt pipeline of battery storage projects in the US. That is a big pipeline. So obviously, Equinor disclosed the scale of investment, but clearly making quite a move there. Also on inflation, we've seen in the energy storage markets, Wärtsilä were coming out and saying that they've seen price increases of 25% in the past year. And a lot of that, some of that's down to, obviously, as we know, it's the raw material costs that go in there, the lithium and other raw materials, and supply constraints are leading to that. So there's inflation in the sector, but clearly, as we keep banging on about, there's a lot of investment going on. I don't know, Andrew, if you saw, but also Plug Power, this is on hydrogen. They've said that they're planning to deliver 200 megawatts of electrolyzers this year, quote, a 40-fold increase on shipments in 2021. Crikey, this is an interview with Recharge publication, and that's quite a ramp up in production there. And they have also said that they've sealed the gigawatt scale electrolyzer order from a Danish developer, H2 Energy Europe, for delivery in 2024. So again, investment continuing, heavily into the transitional energy sector. And then quickly we saw Ilika, who had, this is solid state battery company, it's quoted in the UK, tickers IKA, they have 4-year results to April. And their shares, unfortunately, they're down like 70% this year so far, but they're looking to commercialize their solid state battery tech for industrial wireless sensors and IoT applications, but also they have a technology called Goliath, which is aimed at electric vehicles. So I don't know if you saw their results, Andrew, at all.
I probably was busy concentrating on my putt on the third hole.
Well, you are combining a little bit of work with your vacation, which is very good of you. Well, I've quickly, just on their results, their turnover was about £500,000, and they made a loss of 6.4 million. But they've said that the manufacturing process for this technology. They managed to qualify that. And they're looking to scale up the manufacturing, but in commercial sales in 2023. So, sort of as with everything in this sector, for earlier stage technology, it's just taking time to get that, get the tech fully commercialized and into the marketplaces. So it's going to take a bit more time, but fortunately, the company does have quite a lot of cash. It's got 23 million on deposit. So
I did a big fundraise when the market was hot, didn't it? And raised a lot of money. It's a good company, Ilika. Actually, I've been down twice, I think, to Southampton to see them, and I think, as you say, the glass project it's slipped behind a little bit, but it's a good project. I think as a stock, it's good. I mean, the problem is, as you say, it's off year to date 75%, but everything in the sort of battery and transitional energy space is off 75% or so. So it's not a reflection on the abilities of the company. And I think down at this price of 44p, it's probably exceptionally cheap because, again, it's just the sort of company that could easily be acquired by an American who just goes, look, they've got fantastic technology. I want to acquire that.
Yeah, absolutely. And there are a number about, as we know. I mean, moving just quickly on to tech. And on the subject of inflation, which is very close to everything's happening in the markets, really. I don't know if you saw, but there was a statement out. We've all seen actually, but there was a statement out from Micron Technology, and this was saying that in June that they were seeing they were going to reduce production. And Micron Technology is one of the bigger memory chip companies, and of course the memory chips go primarily into things like PCs and servers, and the PC and server market driven by cloud services, and also us at home buying all the consumer tech during the downturn were really, really hot markets, and were caused a tremendous supply chain problem in terms of silicon chips. And there were knock-on effects into the automotive markets in particular. But what's happening in the market here is that the PC market, particularly smartphones, do appear to be slowing, in part dampened by consumer spend. And this has the potential to knock on. Obviously, if you look at the chip stocks and the Philadelphia stock index, they're down over 35% this year. But this could ease up some of the supply chain issues that we're seeing. And then in terms of global localization, Bosch have announced that they're investing 3 billion euros in chip production in 2026, so bringing more chip production into Europe. So some quite big changes and fundamental changes happening here. But further down the road, the knock-on effect here is we know that when the chip markets come off and demand falls, prices fall very sharply. So again, for inflation, that's probably quite positive news.
Well, actually, on that sort of it's a smaller company, but showing how things can turn the other way. Did you see MPAC? They unfortunately had a profits warning the other day. Now they build batteries in the UK, but they've obviously seen, what we're saying is they're slightly obviously ahead of the curve there. Pressure coming onto them. I don't know if you saw that one, Phil. I just saw it sort of a little bit in the sort of the rear view mirror, should we say?
No, sorry, I didn't. No, I missed that one, Andrew. So well spotted you. But no, I didn't see that.
It's a well-held stock, actually. A lot of people have really got into it. So it was disappointing to see, to be honest with you. It's one we probably need to go and... I have emailed, actually, the CEO a few times to go and see could I see him, and never got a reply. So maybe that was a good miss. Might have got bullish on it. Maybe I'll email him again and say, can I come and see you now and try and help me put the share price up?
Yeah.
It's now off 55% year to date, and for a company that's a bit of a favourite, that's not good.
It isn't. So yes, hopefully he will have a chat to you, Andrew. He should do. Did you see? Keep saying, did you see? You're supposed to be on holiday, Andrew. Right. So Solid State. The ticket is SOLI. What we talked about before. This 90 million market cap. And Solid State, a company I've known for a long time, they originally were a electronics component distributor primarily, and they've expanded that, and they design in silicon chips into various applications, including computing power and communications products. They manufacture whole products themselves, and they have value-added services for industrial military markets, and they do specialized battery assemblies for all sorts of applications, including military, medical, UAV. And they have announced an acquisition. They're acquiring a company called Custom Power in the States, and they are a battery systems manufacturer. They do battery packs for military, medical, UAV. And the terms are they're going to acquire this for £36 million, and they managed to solid state place shares raising £26 million. And that placing closed yesterday. So a bit of activity there on the market, and actually very good to see. Yeah.
Well, that is good, and it's a good fundraising in these markets to raise money like that is good. So well done then.
Yeah, absolutely. Moving on quickly, Computer Center, ticker CCCC, 3 Cs. The market up 3 billion. Their shares are just down 8% over 12 months. We've mentioned this company a lot before. It's in IT services, serving many large companies, doing all sorts of things in terms of digital transformation, in terms of their software, cybersecurity systems. So this company has repeatedly generated profit growth. There's a long history of profit growth, and they made an acquisition. So this is a UK company, again acquiring in the States, which is interesting given the start of our conversation about currency. And they've acquired an IT services company called Bits in the States. They employ 100 people, and it's saying that this turns over $245 million, EBIT of $8.9 billion. Haven't disclosed the acquisition terms, but shows that despite the environment, again, tech companies are still going for it and investing ahead. So that was, again, good to see.
Very good. Yeah. I mean, I think that, if you're making an acquisition, a good time to make an acquisition, if you've got the balance sheet, is, of course, when markets are weak. And actually, UK companies in general have pretty strong balance sheets. That's why we're seeing so many share buybacks at the moment. And I'd far rather see a company do a good acquisition than a share buyback, because that sort of says they've run out of ideas, but they just think the company's too cheap. Of course, doing acquisitions in the States has always been quite tricky.
Yes.
It has a history of being tricky, so you have to watch out for that. But yeah, I'm all in favour of companies. I'm all in favour of M&A. There should be more M&A, and I think we will see more M&A.
Yeah, quite right. Because there's so much good technology out there, and now you can potentially get it for a reasonable price. So it's a damn good time to be looking at these things. Just very quickly, One Spatial, which is this is location. Highly specialized location software. I like One Spatial actually. The ticker's SPA, market cap's 53 million, and their shares are up 19% over the last 12 months. And they just announced that they've won a 5-year contract, and this is for the Centre of Advanced Transport in the University of Maryland. And this is to use their software called One Integrate to support automation and conflation, there's a word I've never heard before, of traffic data for the US Federal Highways Administration. And this is to assess conditions for travel reliability, road conditions and congestion, and improve their roadways. Sounds like we could do with a bit of that over here, actually. And this contract's for $0.6 million. So well done, One Spatial. And moving quickly back to the theme of military, this is one company we've met before, Andrew, Filtronic. FTC's ticker, 30 million market cap. And again, their shares are up 22% over the last 6 months. Filtronic's a really interesting one. I mean, it's highly specialized electronics systems that they design, excuse me, for aerospace, defense and telecoms, particularly critical communications. So, oh God, pardon me, excuse me. So they've just announced a contract win with a US defense customer for, this is for testing of radio frequency equipment, and it's a £0.45 million contract, and it's to do with land, sea, and airborne platforms. So not a lot more disclosed on that one, and it is defence related, but that's positive for Filtronic.
I mean, some of these defence electronic firms really should be booming in the current environment. We know not only we've got a war in Ukraine, that probably we're in a Cold War, East versus West, so to speak, but also we're seeing the government probably are going to put up the percentage of GDP going into defence, and we also know that the defence spending has been, although it's been staying high, it's been going up into very much the high end, very expensive products like aircraft and that sort of thing, rather than a lot of the general stuff. So there's a bit of catching up to do, and certainly if Penny Mordaunt becomes Prime Minister, who is the one that I would like to see, for what it's worth, I would like to see her become the Prime Minister of the Conservative Party. Just putting it out there. And I have done right from the beginning, actually. I'm a bit of a fan of her because I'm a Pompey boy and she's a Pompey girl. And she, obviously being a Royal Naval reservist, I'm sure would be all in favour of upping defence expenditure and making sure that the armed forces have what they need to fight a war.
Well,
that was a party political broadcast by VSA Capital.
It was. Well, you're not hiding your light under a bushel there with that one. Well, let's see who wins. I don't know what the bookies' odds are at the moment on it, but we'll know very, very shortly. But yeah, you're right. I mean, getting swiftly back to UK defence, a lot of the money has gone into very, very large platforms, and it will now, especially given what's been seen, I guess, in the Ukraine and on the battlefield, there be filtering down to a lot of the smaller systems, but and there's some good little UK companies here with highly specialised, engineering expertise that will benefit from this. So particularly companies like Filtronic.
Very good.
There we are, and I think the only other one that I spotted this morning, and you may be a bit late for investing in this. And it's XAR. XAR is the name. Ticker is XAR. This one's been listed for quite a long while, and I do know this because the ex-finance director of Domino Printing Sciences, I think, is still the chairman of XAR. XAR make industrial inkjet printing heads. So not the printer that sits next to your PC in the house. These things are used to print on packaging, pharmaceuticals packaging, food, beverages packaging, ceramic tiles. So a whole mix of applications for this type of printing tech, and it needs to be able to operate very, very accurately and at enormous speeds. But XAR have been through quite a lot of restructuring over the last few years. They originally did well on the ceramic tile printing, particularly in China, and that market fell away, and they've had to, they have to go through a lot of restructuring, reorganisation, and focusing on their markets. And they had a trading update today for the 6 months to June, and they're saying that they're expecting revenues of £37 million. It's a 41% relative increase. So they made an acquisition there, but the organic growth was 14%, which was very, very strong. Improved their gross margins, which is something that we've been looking for very closely in this market, given the cost pressures and inflationary price, impacts the cost of sales. So that's really, really good in terms of the cost management. Yeah,
no, XAR's been an absolutely fantastic performer over the last few years, and I followed it quite closely. I'm a fool. So many people told me to buy it, but if Schroders can't buy anymore because they've got 29% of the company, they have to bid for the whole damn thing. But I know that Andy Buffett Schroders has made a fantastic profit out. Well, you haven't got a profit till you sell, I suppose, but it's done very well on picking this up one. But they also have really good other shareholders. They've got Aberforth there with 9%, Threadneedle with 7%, Invesco with 5%, Fidelity, Chelverton. I mean, it's a blue chip shareholder base they've got, and it's really performed well. It's a great company. It's of course the only danger is as soon as you say it's performed well and it's a great company, it's got brilliant shareholders, things can sometimes then go wrong. But it's still actually only 150 million market cap. It looks as though it's on a massive PE, but as you say, it's doing really well. And so I think that's sort of it's maybe not rushing and buy it today because it's obviously come up from sort of 20p to £1.90, but it is a good company.
Yeah, and then there are, internationally, not a tremendous amount of companies in the space either. management's done a fantastic job in turning around this business. As I say, Andrew, the chairman, was the ex-FD of Domino Printing Sciences, and Domino, from memory, used to cover it, but that ended up getting acquired by, this is Cambridge-based, and Domino made industrial printers. They were acquired for 1.1 billion, if my memory serves me right. So there aren't a lot of these things around sort of globally. It's fairly narrow, it's very specialised, and so not surprised it's valued where it is. But yeah, good company.
Good. Right, I think we'll call it a day there, Phil, because actually I've got a tea time coming up fairly soon. I've got to get the clubs ready.
Well, listen.
And next week, I don't know if you're about next week, but I'm fishing next week.
Are you? Well, listen, look, Andrew, you're on holiday. You should go and enjoy it. And I'm sure I'll manage to put a podcast together next week before I go away the following week. But I wish all our listeners a relaxing weekend. Enjoy the weather.
Too hot. Plenty of ice water. Keep with you.
Absolutely.
Very good. Thanks.
Okay. Cheers, Andrew.